Now. Welcome, everyone. Thank you for joining us. I think we're going to get started just to be mindful of time this morning. So we appreciate all of you that have joined us online during this snowy weather that we're having today. My name is Mary Jo Katras, and I am with University of Minnesota Extension in the Department of Family Health and Wellbeing. And I am just thrilled to be able to help host Taxes 101 again this year. We have been hosting this with our partners for the last 15 plus years. So I know many of you have been regular attendees of these webinars and some in-person events that we've had over the years. And so we appreciate you joining us again today, and welcome those that are new to this conversation. So today we have we're presenting with our partners. Aisha Cervetti from Mid-Minnesota Legal Aid is here with us, and she will be talking about state and federal tax credits. And then we also have Nan Madden, who is the director of the Minnesota Budget Project, that will be talking about child tax credits. My colleague Young Mao has been was helped to develop this webinar. He is out at a different meeting today, but wanted to recognize him as well. And so Aisha, if you want to go back to that disclaimer slide, just to recognize that for everyone that this presentation is for educational purposes only and will not be used as a standalone document. And that also it's based on facts and circumstances being discussed. And you can read the rest of that. I will not read it for you. So anyways, thank you again to Nan and Aisha for joining us today. We are always grateful for those that can share their expertise around during tax season and the new things that are happening, and making sure that we are connecting with those that we work with throughout our communities to make sure that they are informed of new tax laws and things that are happening, and so that they can really make the most out of the tax season and what we refer to as the money moment, right? When we're working with families and communities across the state. So without further ado, I'm going to pass it over to Aisha to get us started. And really quick, I guess I didn't say this housekeeping item is if you have questions, please put them in the chat. And I will be monitoring the chat, and we will be asking questions. We'll pause and answer some questions throughout the presentation. And if there's something that needs to be asked right away, I will pause as well and get that question asked. But please don't hesitate to put something in the chat if you have a question or a comment. So thank you, Aisha.
Perfect. Thank you, Mary Jo. My name is Aisha Cervetti, and I'm with Mid-Minnesota Legal Aid's Low-Income Taxpayer Clinic. And we partner this presentation between Mid-Minnesota Legal Aid, Prepare and Prosper, the University of Minnesota Extension, and then we have Nan joining us for the Minnesota Budget Project as well. And so our previous Taxes 101, we did the federal updates and federal tax credits. And so this time we'll be focusing on tax preparation and the Minnesota tax credits updates that Nan will be providing us, and then talking about some resources at the end as well. So I'm going to be talking about free tax assistance and free tax preparation in Minnesota. There are a few different programs that are available that are funded both by the state of Minnesota and the Internal Revenue Service. So we have the Volunteer Income Tax Assistance, or VITA programs. Those programs are income-based. There is no general age requirement. There are hundreds of sites throughout the state, and I'll mention times the different ways that you can find out about where to locate a VITA site near you and your clients. And they are usually run by nonprofit organizations. There are also tax counseling for the elderly TCE sites. Those don't generally have an income requirement, but they are for individuals 60 or older, is the targeted audience, and they usually run by AARP. So those are the tax preparation programs that we have. We also have IRS tax dispute assistance helping with audits and collections, and that's where my clinic comes in at Mid-Minnesota Legal Aid. And then there's also a low-income taxpayer clinic at the University of Minnesota's law school. So there's kind of like two parts to free tax assistance in Minnesota. You have the tax preparation, and then you have what happens after you file your taxes. So looking at what exactly is free tax preparation. So taxes are prepared at the VITA TCE sites by IRS certified volunteers who really want to help individuals maximize their refund potential that they have. And there really is free means free. There are no hidden fees at the tax-free tax preparation site to VITA or TCE. E-filing is available at those sites. And then when used with direct deposit, they're a great opportunity for people to get their refunds quickly and efficiently. And then every return is reviewed by a second set of eyes. So there's the individual helping with the preparation of the return, then it's reviewed by a supervisor before it's submitted. And so there are a few different ways to find a tax prep site. There's the Minnesota Department of Revenue. That's the main one I go to. And if you just go to revenue.state.mn.us, in the search bar, you just do free tax preparation and it'll pop up. And I'll show later on what that screen looks like. But you have the ability to do a search in your area based on where you're located, county, language needs. It's a really great resource on Minnesota Department of Revenue website. You can also call and get a list of VITA sites that way as well. And then on the IRS website, there is a search tool for finding a free tax preparation site where you do your zip code, and it includes free tax prep sites around your area. So there's also free online filing. And so I'll be highlighting three main ones that are used often for free online filing. There's My Free Taxes, and they're a great resource, and they have do it your kind of self-guided online filing. They also have the option to have someone assist you through submitting your documents, kind of like at a VITA site. It takes 1 to 2 weeks, and then your taxes are prepared that way. And so there are income guidelines for using these services. For doing kind of the guided online filing, it's $79,000 or less adjusted gross income. For using their service for assistance, it's around $66,000 up to that amount for adjusted gross income. You can also go on the Minnesota Department of Revenue website and look up free electronic filing, and they have resources there for being able to get your state tax returns done. You can also go to the IRS website and type in free file program. And it's similar to these to the state. It'll have the partners that the IRS has for preparing tax returns for free filing, and there are income guidelines for that as well. Each program is different, so some programs will go up to the $79,000. Other programs go up to $47,000, for example. It just depends on the individual program. And then there's also Get Your Refund, which is similar to the My Free Taxes, where you can do the guided online filing through the software program, or you can have them prepare them as well, just like you would at a VITA site with those income guidelines that I'll talk about too for VITA sites. So if someone needs some additional assistance, but perhaps is over income guidelines for getting the free tax preparation, they do have some guidelines for choosing a paid tax preparer. And that first is just making sure you don't qualify for a free tax preparation option, be it through a VITA or TCE site. Depending on qualifications, you want to check and make sure that the tax preparer is qualified to prepare taxes. A lot of times we see people just go to someone that's recommended in their community, especially in communities where English isn't their first language, or immigrant refugee populations needing to do taxes. So they just go to someone who's recommended in their community, but they might not be qualified necessarily as a tax preparer. They might um, not have a prepared tax identification number. They might not be signing those tax returns themselves as well. So just wanting to check and make sure that you look at reviews of the preparer as well, that you talk about any fees that they might have up front so that you're not surprised later on. Making sure the preparer is accessible, especially after tax filing season. A lot of times people will just kind of disappear overnight, and you're unable to find them if you have an issue later. And making sure that you review the entire return before signing, that your clients realize that they are responsible for its accuracy, and what is on that tax return. And so making sure that they're aware and understand the types of credits that are being claimed, deductions, filing statuses, making sure if they are doing electronic deposit that it is their bank account listed. There are so many times with clients I have that identities are stolen or refunds are stolen. So just making sure that that information is accurate on the return and that they are reviewing it. So I just want to highlight a little bit about our partner, Prepare and Prosper. Prepare and Prosper is one of the larger VITA sites in the Twin Cities area. But again, there are VITA sites throughout the entire state. Prepare and Prosper works on promoting and fostering financial health and wealth in individuals. They offer free tax preparation, financial services, and financial counseling. And they do have their fair financial solution, their fair ability to get banking accounts and financial resources and coaching and mentoring is available. And so what they are mostly known for, oftentimes, especially during tax filing season, is that free tax preparation. They do have IRS certified volunteers who are passionate about what they're doing. They have to go through a course in order to prepare taxes, and then being available to help with people's individual returns. So what Prepare and Prosper can help with is both property, state, and federal returns. I will note that if someone is just doing a return for the renter's rebate credit, Prepare and Prosper helps with those in the month of April. So a person can schedule an appointment for that if that's the only return that they're named to. But as we'll talk about, it's really beneficial to at least do a state return as well to take advantage of some of these new state credits. So appointments are available for that. They can also help with amended returns if they prepared the previous return, or they can sometimes make a special exception. I've had clients that have needed amended returns that were the originals were prepared by someone else, and they were able to get someone to assist them at Prepare and Prosper. They do help with previous year returns. And most of those previous year's returns, I believe they're going back to 2018. And then they do help with some self-employed returns. There are certain situations like if you have rental income or cryptocurrency, they're unable to help with those types of returns. They are open year round and they do have interpreters available. Another great resource that they offer is applying and renewing for an individual tax identification number, an ITIN. And so they're a certified rep for the IRS for doing ITIN applications, which is really great that they're able to do that so that someone's able to bring them their documentation, they can verify it, sign off on it, and then submit the application with a tax return for an individual. And we did talk about, we'll talk a little bit about ITINs today, but we did talk about those in the last Taxes 101 webinar as well. And then they do offer some limited audit assistance if it was one of their returns that they prepared, and someone then is contacted afterwards by the IRS from additional documentation or information or challenging something that was on the return. They can offer limited assistance in that, but that's also where the low-income taxpayer clinics come in. So looking at qualifications, it's looking for individuals who make $40,000 or less, families $60,000 or less, and then the self-employed are over 10,000 and up to $60,000 per year. And that's for qualifying for them, sitting down and assisting you with preparing your tax returns. You can go to their website, Prepare and Prosper. Their phone number right now is currently off because of the high number of calls they were getting. So online is the best way. You can go on their website and right away it'll ask you, do you want to make an appointment? And you can click on that and schedule an appointment and look at availability there for working with Prepare and Prosper. They do have 8 locations in the Twin Cities this year that they're helping individuals with tax preparation. They do also offer a do-it-yourself tax preparation with TaxSlayer software, which I can say I've used before as well, and it's a great software program, and it really does guide you through filing your taxes. And they have a guide with tips, and they have people who are available to answer questions if people have questions as they're doing the DIY tax preparation. That does have the $79,000 as well, up to income. So for the majority of our clients that are low low income and middle income, it's a great resource for them to be able to do that. The 79,000 is for all filing statuses. So if you are married filing joint, it's the 79,000. If you're single, it's 79,000. So just to note that for individuals as well. And then again, if you want to look up other free tax preparation locations throughout the state, going to the Minnesota Department of Revenue's website, just typing in free tax preparation, and then you'll get this. And you're able to, again, look at your zip code, your county, if there's any specific site status of whether they're open, accepting clients. What's really great is being able to select language as well for clients. So if you have a client that needs a specific language, you can look and see if there's a location that has an interpreter for that language available, or maybe specializes in that community as well for services. So I just want to talk a little bit about documents to bring to any tax preparation appointment or have available as you're getting ready to prepare your own taxes and your clients' taxes, making sure that they do have a picture ID, that they have the birth date and social security number, ITIN numbers for every individual who's going to be on the tax return, that they have their routing and account information for whatever account they're putting if they're doing electronic deposit. And then making sure for any income that they have their W-2 or 1099 forms, and making sure they have all those. They should have them because they're required to be sent by January 31st, but just making sure that they did actually receive them all. And then making sure they have any year-end amounts for any benefits that they receive as well. And then if they're going to do any of the education and childcare credits, making sure that they have the information of expenses that they've paid for, if they have those 1098 forms, if they have information for the child independent care credit, they need the provider's name, address, and tax ID or social security number, which is really important. We talked about that in the last Taxes 101. And then for property tax refunds and deductions for homeowners, looking at that mortgage interest statement and real estate taxes prepared, paid, and property tax statements, the renters, the certificate of rent paid, and then mobile homeowners having both of those forms available. And then last, that they have the previous year's tax return. That can be really helpful because there is information that can be needed for that. Verification of health insurance through a 1095A, and then if they had any record of any charitable donations that they'll be taking. And then the biggest thing I always note for people is that they don't know an answer, make sure that they look through their documents, make sure they have everything before they put anything down. Don't guess. Don't be like, well, I think my income was about this, or like, I think I spent about this much on expenses. You're really wanting to make sure that you have accurate information available. So I'll stop right there for my first section there. And if anyone has any questions, otherwise we'll have Nan go into her part of the presentation.
There are no questions in the chat right now, but if anyone wants to unmute and ask a question, please do. Really bad at waiting, but I think if we'll move on. But if you have questions, please put them in the chat and we'll catch them at the end. So Nan.
Oh, great. Thank you. Yeah, thanks for having me. I'm Nan Madden. I'm director of the Minnesota Budget Project. If folks are not familiar with who we are, the Minnesota Budget Project is a program of the Minnesota Council of Nonprofits. We identify and advance public policies to make Minnesota a place where everyone can thrive, regardless of who they are or where they live. And yeah, and I've worked in tax policy advocacy for about 20 years. So I'm excited to talk to you today about some of the exciting things that got done this year. I'm going to cover why refundable tax credits can be a powerful tool for boosting family incomes. I'll spend a big chunk of time on the child tax credit and related changes to the working family credit. And then I'll also touch on some positive tax changes for immigrants who file using ITINs and preview some changes coming in 2025 to the renter's credit. So since most of the tax policies I will talk about today are examples of refundable income targeted tax credits, I thought I'd just take a minute to talk about what those are. So those are tax credits that are available to families or individuals with incomes below a certain amount and often also need to meet some other criteria. In most cases, families apply for them on their state income tax return. And these tax credits do two things. First of all, they increase family incomes, right? So then families have more resources to make ends meet and get their kids off to a strong start. And there's a lot of research that shows that income boosting tax credits improve health and education outcomes for kids, reduce poverty, and have stronger economic outcomes when those kids grow up. And then secondly, these tax credits also help build a fairer tax system by ensuring that low and moderate income families aren't paying more than their share to support public services. Next slide, please. So a credit being refundable is really essential for fully meeting the goal of boosting family incomes and reaching the Minnesotans who are struggling the most to make ends meet. So I'm just going to show this hypothetical example of what it means for a credit to be refundable. So when it's refundable, it means the taxpayer gets the full value of the tax credit, even if that is more than the amount of taxes that they pay. So in this hypothetical example, a family qualifies for a $1,000 tax credit and they pay $700 in income taxes. So first, $700 of that tax credit would reduce their income taxes to zero, and then they receive the remaining $300 as a tax refund. So that additional $300 then helps offset some of the other taxes that these families pay, such as sales tax, and the family just generally has more resources to make ends meet. So now I'm going to talk specifically about the new child tax credit. It was so exciting in 2023, working with Legal Aid, Prepare and Prosper, Children's Defense Fund, Minnesota Catholic Conference, and so many other partners to advocate for a Minnesota child tax credit that I truly believe will be a transformational policy for Minnesota kids and families. The power of what child tax credits can do was demonstrated in 2021 when the federal government temporarily expanded their child tax credit in ways that made it work better for lower income families. And as a result of that expansion, we saw across the country that child poverty came down to record lows in 2021. So that's during the pandemic when there was so much disruption. This policy helped bring down child poverty. It ensured that during tough economic times, families had more resources to afford groceries, diapers, rent, and other basics. And also really importantly that we saw across the country, the expanded child tax credit narrowed geographic and racial disparities in economic well-being because children in rural areas and children of color were disproportionately likely to receive the expanded child tax credit. So seeing those huge policy outcomes, many states like ours said, hey, that was a really big impact. Unfortunately, it was only temporary at the federal level. What can we do here in our state to have that same kind of huge impact on improving family well-being? So the Minnesota Child Tax Credit that was passed in 2023, as a result of that, we're expecting about $400 million per year in additional resources to Minnesota families through the child tax credit and restructured working family credit. Nearly 300,000 families and more than 500,000 kids are expected to benefit. And to put that into context, that's about 1/3 of Minnesota families with kids. And there's some modeling that suggests that this child tax credit could reduce child poverty in our state by about 1/3. So that's a big amount of policy movement. So how does it work? Next slide, please. First of all, the Minnesota Child Tax Credit is permanent. It is not temporary like the federal expansion. It provides up to $1,750 per qualifying child age 17 or under, plus a family can receive an additional $350 of working family credit based on their earnings. And I'll talk a little bit more about how the child tax credit and working family credit work together in a bit. There's also no limit on the number of qualifying children per family. And that's really important. Many tax credits cap out at just 2 or 3 children per family. But about a quarter of kids who live in poverty live in families with 4 or more kids. So it really is important that all of those kids are reached through this policy. It is fully refundable. There is no minimum earnings requirement to qualify for the per child amount. So even the most struggling families can receive that credit. And I-10 filers are eligible for both the new child tax credit and now also the working family credit as well. Next slide. It is an income targeted tax credit. Families with incomes up to $35,000 if they are married filing joint and $29,500 for other filing statuses will qualify for that full $1,750. But many, many more families will receive some amount of child tax credit, and we'll talk about the income limits in a moment. Those income limits for the full credit and the credit amount will be increased in the future to keep up with inflation. And then also exciting is that the tax law allows the Department of Revenue to come up with a system where families could choose to get some of the value of that child tax credit in advance through what's called periodic payments rather than only a lump sum at tax time. Now, that is not something that exists yet. Families who file this year will get their child tax credit as one lump sum after they file their taxes. Next slide, please. So the maximum income at which families can qualify for the new child tax credit and working family credit depends on their family configuration. So what is their tax filing status and the number of qualifying children in the family. So this table gives you some examples. So for married couples who file a joint return, roughly the income limits are $52,500 with 1 child, $67,000 with 2 children, $82,000 with 3, $96,000 with 4 children. You can see what the limits are for folks who have a different filing status. And these numbers then just increase with the number of kids in the family. Kind of a rough guide is add another $14,500 on for each child in the family to get that limit. I will note that the definition of what makes a qualifying child is different from claiming as a dependent or for filing for the federal child tax credit. So that is something that families will want to look more into and see what works, what matches for their situation. But the major criteria for being a qualifying child, again, is age 17 or under, and that they lived with you for more than half of the year. There are some exceptions to that. I'm going to just emphasize kind of the disclaimer that came at the first time, is that I am working to provide information that is detailed enough for you to think about who are the folks you serve or in your community who are likely to benefit from the child tax credit. But tax law is complex And I am not providing information that is specific or nuanced enough that you could tell a particular family with 100% certainty you will qualify for X number of dollars in tax credit, because there are nuances about family relationships and sources of income that will come into play. Okay, so for those who are more visual learners, I wanted to provide a chart to help think about, how does this child tax credit and working family credit work for families? So this is an example. Here we're just talking about folks who are filing with head of household or single or married filing separately in some circumstances. And I'm showing from 1 to 4 children. Of course, it is not limited to only 4 kids, but that's just how many I could fit on my chart. So we look at this chart. That lowest blue line is how the credit is calculated with 1 child. Then as you move up, 2 children, 3 children, and 4. And then reading the chart from left to right, you see that the lowest income families with no earned income, qualify for that $1,750 per child, even at that lowest income level. Then as families have earnings, the working family credit kicks in. Again, that's up to $350 per family, and families reach that full $350 when their earned income is reaches $8,750. And then once the family income is above $29,500, families still qualify, but not the maximum amount. The amount is reduced until they reach those income limits. One thing to know, if folks are familiar with the working family credit that families would have qualified for previously, that also has changed. So not all of the credit amount shown on this chart will be new resources to families. Essentially, some of the dollars that families had been receiving from the working family credit is shifted into the new child tax credit. So the net new resources for families will receive is the difference between the new child tax credit and working family credit they qualify for, and the amount of working family credit they would have received under the old rules. I've talked about the working family credit a few times, so I'm just going to mention what that is. That is Minnesota's version of the earned income tax credit. It's a refundable tax credit for low and moderate income families based on their family size, but is only available to families with earned income. And the big takeaway is that practically all the families with children 17 and under that previously were eligible for the working family credit are eligible for the new child tax credit. So if we can keep those example families on the screen, I'll talk about that. Yep. Thank you. Sorry. So looking at a few examples of the types of resources we're talking about for families here. So say there's a single parent with 1 qualifying child, and that family has $10,000 of earned income. So that family qualifies for the maximum of $2,100. So $1,750 child tax credit plus the $350 working family credit. That's $1,165 more than they would have received under the old working family credit rules. For a single parent with 2 qualifying kids and $25,000 in income, again, this is a family that qualifies for the maximum amount of credit, $1,750 child tax credit per child and $350 working family credit. That's an increase of about $1,400 over the working family credit they previously qualified for. Married couple with 3 kids, $35,000 of earning. Again, this is another family that qualifies for the maximum credits, more $5,600 in total, and nearly a $900 increase per kid over what they would have qualified for before. And then finally, a married couple with 4 kids and $80,000 of income. They're above the phase out threshold, so they get less than $1,750 per kid. But this family previously didn't qualify for any working family credit. So that's all additional resources to that family under this law. And do want to lift up, there's a new website that actually launched today that is a resource for folks to learn more about the child tax credit and what are the filing options, covering many of the things you've already heard about today on those filing options. That's called claimyourmoneymn.com. So that is a resource you can share with your constituents. So up till now, I've been talking about how the new 2023 tax law benefits families with qualifying children age 17 and under. Families with older qualifying children do not qualify for the new child tax credit, but instead these families could qualify for an updated version of the working family credit for older children. So the way that works, qualifying children in this case could be age 18, could be 19 to 24 and a full-time student, or they could be over 17 and permanently and totally disabled. The credit amount here is $925 if they have one older child, $2,100 if two older children, $2,500 for three or more older children. That amount, based on the number of kids, no longer is dependent on earnings. So that's now available for families with without earned income or very low earned income. And plus, again, that $350 per family working family credit based on earnings. There's the same phase out threshold, so the dollar amounts at which families qualify for the maximum credit are the same as for the child tax credit, although the income levels at which families become ineligible for this working family credit with older children is different and lower than for the child tax credit. And importantly, again, because of laws changed this year, ITIN filers now are eligible for the working family credit for families with older children. If a family has both older kids and kids 17 and under, they can qualify for both the child tax credit and the working family credit for older children. That'll be combined on their tax form. Finally, I do want to mention there is a working family credit for low-income workers without dependents. That has been simplified and expanded in the 2023 tax bill. The amount of the credit is based on earned income and is up to $350. That's for single folks with incomes up to about $33,000 and married couples at about $38,000. Okay, so now I'm going to switch gears and talk about ITINs. For the next slide, I'm going to talk about the tax changes passed in 2023 to make the tax code more equitable to folks regardless of their immigration status. Those are the new eligibility for the child tax credit and working family credit that I already talked about, but also now ITIN filers can become eligible for homestead status on homes they own, which also opens the door to eligibility for homeowner property tax refunds. So again, ITINs are a unique identifier that people use for tax purposes, folks who aren't eligible for a Social Security number because of their immigration status. Folks can now provide that ITIN when they apply for homestead status. So now they're on a level playing field with other homeowners. Next slide, please. As a result of now accepting an ITIN as an identifying number for homestead status, the Department of Revenue estimates that 3,375 homeowners in Minnesota will be able to receive homestead status on homes they own, and approximately 1,900 additional homeowners will be able to file for a property tax refund. And it's estimated that will be about $2 million per year for these homeowners. In order to get homestead status, folks will need to apply to their county assessor by December 31st to gain that homestead status, which then will be in effect for future years. That is just a one-time application. Next slide. The benefits of having homestead status is one that it lowers the amount of home value that is subject to property taxes. So paying less in property taxes than a homeowner that does not have homestead status. And then if they meet other eligibility requirements, those folks can qualify for the homeowner, the Minnesota homeowner property tax refunds. There are two, the homestead credit state refund and the targeted homestead credit refund. Excuse me. We go to the next slide. The homestead credit refund You might know it as one of its prior names, the property tax refund or the circuit breaker. That is for homeowners whose property taxes are considered high for their income level. Homeowners must have household income below about $120,000. And the average refund is about $1,000. The targeted homestead credit refund is for homeowners whose property taxes have increased by 12% or more in 1 year. And that increase is not because of improvements to the property that increased its value. And there's no household income limit to qualify for that refund. Now, homeowners do need to apply through the state's homestead credit refund process in order to receive either of those refunds, and that's a yearly application process. Okay, so then my final topic is I'm going to preview some upcoming changes to the renter's credit. So these have not happened yet, but are coming in 2025. So the renter's credit is our property tax refund for low and moderate income renters. It's one of the tools the state uses to bring down the cost of housing for Minnesotans. And it is a property tax refund paid by the state to low and moderate income renters that takes into account their income, their family size, and how much they have paid in rent. So it recognizes the fact that while renters don't pay property taxes directly, they are helping pay the property tax bill on their building through the rents that they pay. In 2021, nearly 300,000 Minnesota households received the renter's credit. It was average one time. The average annual refund is about $731. Over 60% of the folks, excuse me, over 60% of the households who received the renter's credit had household incomes of $40,000 or less. And about 30% of the households receiving this credit include seniors or people living with severe disabilities. It is something that people have to apply for through the separate property tax refund process, although that is changing in 2025. Nothing is changing this year, but in 2025 is when we're going to see some big changes hit. Next slide, please. So, like I said, right now, folks apply for their renter's credit through a separate property tax refund application. Starting in 2025, folks just will be able to file for the renter's credit as part of their income tax filing process, so no longer having a separate system. The eligibility and the formula for calculating the credit will largely stay the same, except one big change is that we will no longer use this very complicated definition of income used on the property tax refund form called household income. It's much broader. It's very complicated. It's a real barrier to people being able to file this return. Instead, it will be based on folks' adjusted gross income, which is what is used for most other things on the income tax form. And then finally, because of moving on to the income tax form, there's a timing change. People will apply earlier in the year and they'll get their refund earlier in the year. And I have the filing deadlines up here of, when the property tax refund is due, when the income tax is due. But I do want to point out that folks can file after that date with no penalty if they are only claiming a refund. There's only a penalty for late filing if taxes are owed. I will note that homeowners will continue to use the separate property tax refund process for filing their property tax refunds. Only the renter's credit is moving on to the income tax form. Next slide, please. So the benefits of moving the renter's credit onto the income tax form and simplifying that definition of income is an expected impact of an additional $135 million in refunds going to Minnesota renters. More people are expected to receive the credit. That includes an estimated 119,000 renters who are currently eligible but are not navigating the system and claiming their renter's credit are expected to start claiming it once it's on the income tax form. And about 33,000 households are expected to become newly eligible for the renter's credit. Many of the folks who currently get the renter's credit will get a larger refund because of these changes, about $200 an average. And as I said, a simpler definition of income makes it easier to apply, and renters will get their resources sooner. It's a big change though, and there are some challenges that we'll be all needing to support folks through. It's a big culture shift to have this timing change. A lot of folks are used to filing for their renter's credit in the summer and fall and getting those refunds later in the year. We hear a lot that folks, know it's coming at that time. They use the refunds for their back to school shopping. Folks will need to realize, starting in 2025, they need to file earlier and they will have gotten their refund earlier. So not to be expecting to get that refund in the fall. And we need to make sure folks successfully make this transition. There are a fair number of folks who don't file income taxes now. They're not required to do so, and so are only filing for the renter's credit. Those folks will need to be reached out to and supported to make sure that they make that transition over to filing for their renter's credit on the income tax form. We've got time. Again, these changes don't start until 2025. So that'll be something that as a community we'll all need to be paying attention to. All right, that's what I have prepared, and just have my contact information here on this slide.
This is Pang. I don't know why on my screen it says Anna Scholl. So I'm with Legal Aid, and Anna has shared the link to this training with me, and so I just clicked on the link, and I guess I am Anna Scholl by clicking on the link. So I do have a question about claiming children on taxes. So I have a client whose ex has been claiming the kids on his taxes every year for the past 4 years. And he does not have custody. The children do not live with him. And so she has to file her taxes every year and it gets rejected. And so the IRS would do an audit, and they would, find out that yes, she is the right person to be claiming the kids, and they'll, correct the returns and all. Is there a mechanism in place? Is there something she can do to maybe put a pause on his filing, until she files? Because it's getting quite frustrating to the point where she has to do this every year.
No, definitely. I think
Yeah, sure.
the there is it is kind of that race to see like who files first, and then if he's claiming them and then she has to paper file and do all that. There is a form, and I can look it up too, that you can report someone to the IRS for doing something like that, for claiming a dependent that they shouldn't be. And you can report the individual to the IRS, and then it's up to the IRS whether or not they can investigate, and then they can put a stop to someone being able to file and claim someone. So that is an option that's available.
Okay. Yeah, I think that would be great. I think my client would really, like that, to file something so that because he's always racing to file his taxes before hers. And she encounters this every time she files. So it's really frustrating. She needs the money. Yeah. Yeah. Well, thanks for that, Aisha. And, our meeting tomorrow was this question too. So I guess I'll just go ahead and cancel that meeting. Thank you.
Thanks.
Other questions? There are no questions in the chat, but please feel free to unmute and ask questions. Thanks, Ken. Let's see, I can read this out loud and then whoever would like to answer it. Question with regard to the working family credit. Is there any relief for retired persons on a fixed income only with no earned income who is supporting an adult child who is totally and permanently disabled?
My guess, and this is again, not detailed tax advice, certainly, there are ways within the working family credit that, people who are grandparents or other relatives may be able to claim a child as a qualifying child. It does feel like the barrier here is, working family credit. They, with the change to the working family credit that just happened, they may be able to qualify for the per child amount. Not the $350 that is based on earnings. But there are some limits on how much investment income folks can have and still qualify for the credit, so, it's hard for me to say with this example, whether that might be, something someone in that situation would qualify for. It might be worth investigating.
Thank you, Nan. Other questions, either in the chat or can unmute? Okay, if there are no questions, maybe we'll hang out for a little bit, since we have a few minutes left before the end of the official time, of the ending of the webinar. But I just wanted to thank everyone for joining today. And of course, our presenters, Aisha and Nan, for presenting such great information. It's always so helpful, to have the current, but then I also appreciate, Nan, the forecast for next year, right? And what we're looking forward to, because I think it's really important for us to be able to know what's coming, what's in front of us, and then figure out how we can educate folks along the way and throughout the year than just at one time and done, kind of what as tax year hits for next year. So we'll be looking for those trainings and for folks to help us understand what all of those things mean around renters credit and those changes. And then of course, just monitoring the child tax credit as well and what happens this year, and the kind of tips and tricks that probably everyone will learn, right? So thank you, both of you, again. We will be sending out the recording and the slides for this presentation. I will also be sending out an evaluation for folks to fill out as well. I put in the chat earlier that we'll also send out the recording and slides from last week's webinar as well, so everyone has those in one place and space. So thank you again, and we will stay on for a little bit to answer any questions that people might have offline. So have a good day and enjoy the snow.